If you're getting Social Security right now, I need you to stop whatever else you're doing and stick with me for a few minutes. Three major money changes are hitting seniors this July, and every single one affects cash that's already supposed to be in your pocket. I'm not talking about things that might help you far off in the future or programs you maybe should look into someday. These are real dollars, right now, with strict deadlines. And what really bugs me, as an attorney who works with seniors, is that most people don't even hear about these changes until it's too late, or they see a headline, but never learn exactly what to do to actually get the benefit. Look, a headline doesn't put money in your account. Taking action does. Filling in a form, making a phone call, asking for the specific program, these are the steps that work, and I'm going to lay everyone out for you, plain and simple. My name's Walter Barron. I'm an attorney, state bar licensed, and for over 15 years, I've sat across the table from families trying to protect their savings, their homes, and the money the government already owes them. I read the fine print so you don't have to, and today, I'll walk you through these three changes exactly the way I would walk my own parents through them. Before you tune any of this out, really stay with me. Whether you're 62 or 82, still working part-time or fully retired. At least one of these three absolutely relates to you or someone you love, and the change you think won't matter. That's often the one that hits hardest when you least expect it. If you're here, do me a quick favor. Hit the like button, and if you want more breakdowns like these, subscribe. It's free, and it helps this info make it to the people who honestly need it most. Okay, here are the three big changes right up front. Then we'll dig into each, step by step. First, there's a change to how your Social Security payment gets to you. Ignore this, and your check can literally stop arriving. Second, there's a brand new deduction in federal tax law that could put up to $6,000 back in your hands at tax time, but only if you know how to ask for it, and the vast majority of seniors never will, simply because nobody tells them. Third, there's a cap now on what you'll ever have to pay, out of pocket, for prescription drugs in a year. And if you know the program that turns it on, you could stop worrying that medicine costs will eat through your savings. Now, you might already be asking, Walter, if these are so important, why haven't I heard about any of them? And honestly, that's the reason I make these videos. These rule changes don't come with a phone call or a friendly reminder. Most of the time, they're buried as a line in a 1,000-page government bill, or posted on a website nobody checks, or shuffled in while everyone's focused on other news. Nobody's coming to your door to make sure you claim your $6,000 or update your payment info on time. The system assumes you'll figure it out alone, and if you don't, they quietly keep the money, or let the deadline float right past you. That's just how it works. The only defense you have is knowing and then acting. So let's make sure you do both, starting with the most urgent change, because this one's on a ticking clock. Let's talk about the end of paper Social Security checks. The government's moving every single beneficiary to electronic payments. If you or someone you love is still getting a paper Social Security check in the mail, listen closely. The window to make the switch is closing fast. Do nothing, and you really could be left waiting for a check that never comes. Here's what's going on. Executive Order 14,247, signed in March 2025, tells the government to modernize how it pays federal benefits, ending paper checks for good. The goal is to finish this transition by the end of 2026. So, starting September 30th, 2025, the Social Security Administration stops sending out new paper checks. This isn't a rumor, it's the plan. If you've already got direct deposit set up, you're fine. Nothing changes. Your money lands in your account just like it does now. But for anyone still on paper, it's time to take action. Because once those checks stop, if there's no electronic info on file for you, your payment simply doesn't go out. And who's most at risk here? Usually it's the seniors who've been getting their checks the same way for decades, who may not use computers or online banking, the ones who can least afford to miss a month's rent or groceries because their money got held up. That's why you can't ignore this, or let anyone you care about ignore it. Fortunately, switching over is simple. You've got two main options for electronic payment. First, standard direct deposit. Your Social Security lands straight into your checking or savings account each month. You can set this up online by making a My Social Security account, which is quick and free, or you can go to your bank or call Social Security directly and ask them for help. They do this every day and will walk you right through it. Second, if you don't have a bank account, you can get a Direct Express card, a prepaid debit card that works just like any bank card. The government loads your benefit onto it automatically every month, and you use it at stores or for cash at ATMs. Even if you've never opened a bank account, you're not stuck. There's a route for you. Let me run through what you need. For direct deposit, have your bank account and routing numbers handy, and your Social Security info. Then enter the details online, or hand them to a teller at your branch. For the Direct Express card, contact the program online or by phone. Once it arrives in the mail, that's it. Your payments load each month, ready to use. Don't put this off. The only real mistake you can make here is doing nothing and hoping paper checks stick around. That's not happening. I know some folks are uncomfortable with electronic payments. They like the feeling of a paper check in hand. But facts are facts. Paper checks are far more likely to be lost or stolen. About 16 times more likely, in fact. Mail theft is a real problem. I've had clients wait weeks for replacements. Meanwhile, the bills pile up. Electronic payments are simply safer and more reliable. Nobody's swiping your money out of a mailbox, and your deposit arrives on the same day, every month, like clockwork. The government also saves money. Printing and mailing a check costs several dollars per person, every month, and with millions of beneficiaries, those savings add up. They're not going to eat that cost anymore. Now, there is a way to request a waiver if you genuinely can't get electronic payments. Maybe you live in a remote area with no banks or ATMs. If that's you, call 1-877-87-46347 and ask about an exception. But honestly, that's a rare case. For almost everyone watching, it's time to move to electronic payments. By choice, not by force. And ideally before a payment goes missing and you're scrambling to fix it. That's change number one. If you only follow one piece of advice today, and you or a loved one still get a paper check, make the switch. Don't procrastinate. Now change two, and this one's about getting money back you probably never knew was yours in the first place. There's a brand new federal tax deduction for seniors worth up to $6,000 per person. It came out of a major federal tax law passed in 2025, the One Big Beautiful Bill, as they called it, and it's the most generous, senior-focused tax break I've seen in years. But almost nobody's talking about it. This senior bonus deduction is pretty straightforward. If you're 65 or older by the end of the tax year, you could claim an extra $6,000 deduction on top of your regular standard deduction. For married couples, that's $6,000 per spouse, so $12,000 shielded from federal tax, right off the top of your income. Let's put numbers to it. If both you and your spouse are over 65 and you're living mostly on Social Security and a small pension, as long as your total income is under $150,000, you both qualify. That $12,000 could be the difference between a big refund or at least wiping your tax bill down to zero. And for a single retiree over 65, it's an automatic $6,000 off your income, even if your only income is Social Security and a few small withdrawals. You don't have to do anything special. You don't need to itemize deductions or keep boxes of receipts. This is what's called an above-the-line deduction, meaning it goes straight onto your tax return, right alongside the standard deduction that most retirees already take. For most people, claiming it involves ticking the right box when you fill out Form 1040 or the senior-friendly Form 1040 OSR. Now here's the critical detail. There's an income limit. To get the full deduction, your modified adjusted gross income, MAGI, must be under $75,000 if you're single, or $150,000 for married couples filing jointly. Over those thresholds, the deduction slowly phases out for every dollar you earn above the limit. By $175,000, approximately single, or $250,000, approximately married, it's gone. If you're like most retirees, your Social Security plus your retirement withdrawals keep you comfortably under that cutoff, and you get the full deduction. But big, one-off withdrawals from retirement accounts or selling property can suddenly push your income over the line. My clients run into this all the time. A surprise IRA distribution wipes out a deduction they were depending on. So if you're planning a large distribution or selling an asset, think carefully about how it impacts your taxable income, and maybe spread withdrawals over 2 years if you're close to the threshold. Another tip, if you're married, you need to file jointly to claim this deduction. Filing separately, the break is out of reach. So, for most couples, filing together is absolutely the way to go. So what's the takeaway? When you do your taxes for 2025, make sure you or your preparer claim the senior bonus deduction on Form 104-0 or 104-0SR. It's sitting there, just waiting for you to ask for it. These changes aren't just government footnotes. They're real cash, with real deadlines. And if you don't claim them, nobody's going to call you to remind you. The money just sits there, or worse, disappears forever. So stop, take the steps, and make sure you, or your parents, or your grandparents are getting every dollar the law now says you're owed. And keep watching, because up next, I'll break down the new annual cap on prescription costs and how you can make sure you never overpay for your medicine again. If you use a tax preparer, don't tiptoe around it. Tell them straight out, I'm 65 or older. I want you to make sure you're including the new senior bonus deduction for me, the $6,000 one under the 2025 law. Don't assume they'll catch it. Even good preparers miss new things. If you handle your own taxes, the software will ask for your age and flag the deduction, but if you blow past the age question or rush through, you'll miss it. Don't. There's one more move almost nobody knows about, so listen. If you miss out on this deduction for any year between 2025 and 2028, you can actually go back and claim it. Seriously, just file an amended return using IRS Form 104-0X. The IRS will send you the difference. It's not theoretical. This is real money, and it doesn't matter if the tax year's over. You can recover cash from a closed year just because you're now in the know. That can really add up. Picture a married couple, both over 65, who had no idea about this. They're leaving $12,000 of shielded income on the table every single year for 4 straight years. That's $48,000. This isn't pocket change you forget in your jeans. That's a vacation, a relief on your property taxes, or months' worth of groceries. All for checking a single box the right way. That's the second big change, really, the refund that's sitting there waiting if you just take the step. And there's a third big change that matters for every senior who needs prescription medication. This new rule puts a hard cap on what you'll pay out of pocket for prescription drugs under Medicare Part D. Let me spell it out. For years, the worst thing about drug prices was the lack of an upper limit. Get hit with a major illness, need a costly medicine, cancer drugs, specialty pills that go for thousands, and you could find yourself shelling out money all year long with no finish line in sight. That's what's changed. Here's the new number. Starting in 2025, the most you'll pay out of pocket for Medicare. Part D covered prescriptions is $2,000 for the year. In 2026, that cap moves to $2,100. It's pegged to inflation. Here's how that lands in the real world. Say your drugs cost you $500 a month. Before, you'd pay $6,000 a year forever. Now, you'll hit $2,100, and then you're done. The plan covers 100% of your protected meds for the rest of the year. Every prescription after that, no charge. For a lot of seniors, especially those sickest and most squeezed, that's a difference of thousands. For families who've been splitting pills, rationing medicine, skipping refills because they simply couldn't afford it, now you actually get to take every dose your doctor prescribes. It's one of the most important financial protections in a generation, but most people haven't heard about it, let alone understood how it works. People get tripped up by what counts toward the cap. It's simple. The $2,100 is what you actually hand over at the pharmacy. Your deductible, co-pays, coinsurance. Every dollar of that counts toward the cap. But your Part D premium, the cost to have the insurance, separate. That keeps going no matter what. Just remember, for every dollar you pay for prescription drugs, not premiums, you're marching toward that ceiling. And when you finally reach $2,100, the out-of-pocket meter just stops. Your plan takes it from there, covering the rest until the end of the year. Now here's the part that really changes things, especially if your income's tight. There's a federal program called Extra Help, also known as the Low-Income Subsidy, run through Social Security. Extra Help is designed for seniors with limited income and resources, and it can dramatically chop down what you pay for Part D, premiums, deductibles, co-pays, all of it stacked on top of the main cap. Trouble is, tons of folks who qualify never apply. They assume they make too much, or they just haven't heard about it. Don't write it off. The income limits are higher than most people realize and were expanded recently. The savings can be dramatic, sometimes thousands a year. Applying is easy. You go through Social Security, either online or by phone, using Form SSA-1020. It doesn't cost a thing to find out if you qualify, and people who got turned down years ago can get it now, thanks to expanded eligibility. Don't take your neighbor's word for it. Just apply and let them check your numbers. If you do qualify, your premiums, deductibles, and co-pays can drop so far you'll barely pay at all for your prescriptions, on top of that new annual limit. So, if you take any prescriptions and your finances feel less than perfectly comfortable, treat that application like it's as important as any doctor's appointment you'll make this year. Seriously, let's step back and recap, since a lot of people keep asking to see everything in one place. Over the months, I've walked through all these rules, forms, and programs, Social Security pitfalls, property tax breaks, bank account protections, little-known deductions. It can be hard to keep track, so I put it all together in one spot, the Senior Money Playbook. It's written for people over 65 in plain English, with step-by-step instructions, and works on any phone or tablet. If you're tired of chasing down bits and pieces, the playbook is linked below. Now for your action list, the one move to make for each change. First, the Social Security paper check is ending. If you or someone you love still gets a check in the mail, switch now to direct deposit or get the Direct Express card. Don't wait and risk a missing payment. Second, the $6,000 senior bonus deduction is real, but most folks will miss it. When you file, grab it. If you missed it last year, file a 1040X and get back what you're owed. Third, your annual out-of-pocket drug cost cap at $2,100 for 2026. And if money's tight, apply for Extra Help to cut that even more. 3 real changes: direct deposits, refunds, and prescription savings, all happening right now, ready for anyone who takes the step. The difference between hearing this and doing nothing versus acting and keeping thousands you'd otherwise lose comes down to making the move. Make sure you're in the group that keeps what's theirs. Just remember, this is general education, not personalized financial, tax, or legal advice. Always check your details with Social Security, the IRS, or someone you trust. But don't let that delay you into missing out. People who procrastinate lose out, plain and simple. If this helped you, or makes you think of someone who could use a boost, share it. Odds are, nobody's told them any of this either. Subscribe for more updates next week, and I'll see you then.